Welcome back, everybody, to another deep dive. Today, we are going to be looking at tax-free retirement strategies, and we've got a brochure here from National Life Insurance about using permanent life insurance as a component of this strategy. So that's what we're going to be unpacking. And we know you're interested in maximizing those retirement savings while minimizing that tax burden.
Of course, who isn't?
Exactly. So let's get right to it.
Sounds good.
I thought this was a really interesting way that they started out this brochure by talking about, comparing saving for retirement to a farmer planting seeds.
Yeah, I like that analogy. It's like, do you want to pay taxes on the seeds that you're planting or on that harvest?
Right.
Years later.
Years later, exactly. And so that really, I think, highlights the benefit of looking into these tax-free retirement savings strategies.
For sure.
So,
So
speaking of different approaches, this brochure outlines kind of 4 basic approaches. After tax, tax-deferred, pre-tax, and then tax-free. So could you break those down for us?
Sure. So the after-tax savings, it's similar to like putting your money in a CD.
Okay.
You're paying taxes on the money that you put in, and then, again, on any interest it earns.
Right.
And then you've got your tax-deferred options, like certain types of IRAs and annuities. And those, you delay paying taxes until you withdraw the money in retirement.
All right.
Pre-tax savings, like a 401k, works similarly to tax-deferred options, but you get that tax deduction up front when you contribute.
Okay.
And then, of course, you've got the tax-free, which is just what it sounds like, no taxes on those withdrawals when you retire.
That's the goal. Yeah. That's what we want. That definitely sounds appealing, especially given, potential for future tax increases.
For sure.
And so they highlight the Roth IRA as a popular choice for that, but then they also mention some limitations with the Roth IRA.
Right. Not everyone qualifies because of those income limits, and then there are also caps on how much you can contribute each year.
So where does permanent life insurance fit into all of this?
Yeah, so it seems like they're positioning it as a potential alternative.
Okay.
Or a supplement to a Roth IRA to achieve those tax-free retirement goals.
Okay. So it's important to emphasize, though, that the primary purpose of permanent life insurance is to provide that death benefit to protect your loved ones.
Exactly.
If something happens to you.
Yeah, that's the number one thing to keep in mind.
So how does it also help build that tax-free wealth for retirement?
So this all comes down to the cash value component.
Okay.
These policies allow a portion of your premiums to accumulate as cash value, and that grows tax-deferred over time.
So it's similar to a tax-deferred retirement account in that way.
Exactly. You're not paying taxes on that growth until you withdraw the money.
And under current tax law, you can potentially access that cash value through withdrawals and loans that are tax-free.
That's right.
That's great. And they have a nice little diagram in here that kind of shows that process.
Yeah.
The premiums paid into the policy, the cash value growing tax-deferred, and then the possibility of taking those tax-free withdrawals or receiving the death benefit.
Yeah, I think a little visual.
Yeah, I think it simplifies the concept a little bit.
Yeah, definitely.
So speaking of reaping the rewards, they talk about some additional benefits of permanent life insurance beyond just retirement income.
Right.
They mention a self-completing feature. What is that?
Yeah, so that ensures that your spouse's retirement is funded even if you pass away prematurely.
Oh, wow.
Yeah.
So that's a really nice benefit, especially for younger couples.
Yeah, especially for younger couples.
Or planning long term.
Absolutely.
Okay, what other benefits did they mention?
So they also talk about riders that you can add to the policy that let you access funds in case of a serious illness.
Okay.
So these include things like terminal chronic or critical illness riders.
So if you were to experience a qualifying medical event, you could potentially tap into a portion of your policy's death benefit to cover medical expenses. Right, exactly.
Or other financial needs.
Yes.
Okay.
And then they also mentioned the waiver of premium rider,
Okay.
which keeps your policy in force if you become disabled and are unable to continue making those premium payments.
So they're really packing in the features and benefits there.
It sounds like it.
It does. So it sounds like terminate life insurance offers this comprehensive set of features and benefits.
Yeah.
But are they suggesting that everyone should ditch their Roth IRA and go all in on life insurance?
No, not at all. They actually acknowledge that the Roth IRA is a great choice for many people.
Okay.
Especially those who meet those income requirements and can max out their contributions each year.
So it's about understanding the pros and cons of each approach.
Exactly.
And choosing the strategy that aligns best with your individual circumstances and your retirement goals.
For sure.
Okay. So permanent life insurance could be a valuable tool for those who might have higher incomes or simply need more room for those tax-free savings,
Right.
either on its own or in conjunction with a Roth IRA.
But before we delve into whether this might be a good strategy for you, let's explore some of the details and potential downsides of using permanent life insurance for retirement.
Sounds good.
It definitely sounds like it has the potential to be a powerful tool,
It does.
but I imagine there are some downsides or risks to consider as well.
Yeah.
What are some things that listeners should be aware of?
Well, you're right. Like any financial strategy, there are trade-offs. One of the first things to consider is the cost.
Okay.
Permanent life insurance policies, especially those with robust cash value components, tend to have higher premiums than term life insurance.
That makes sense. You're paying for that added benefit of cash value accumulation.
Exactly.
What happens if someone can no longer afford those higher premiums?
Well, that's a critical point.
Yeah.
Those premiums need to be paid consistently to keep the policy in force.
Yeah.
If you lapse on payments, you could lose the policy and potentially face tax consequences.
So it's not a set it and forget it type of investment. You need to be committed, right?
To those ongoing premium payments.
Absolutely. And this is where working with a qualified financial advisor becomes so important.
Okay.
They can help you determine the right amount of coverage.
Right.
And a premium structure that fits your budget and your financial goals.
Okay.
And they can also guide you through the complexities of withdrawals and loans, ensuring you do it in a tax-efficient manner.
Speaking of complexities,
Yeah.
The brochure mentions different types of permanent life insurance, like whole life, universal life, and variable life.
Right.
Could you explain those a bit further?
Sure.
Are certain types better suited for retirement planning than others?
Yeah. So you've hit on another crucial aspect of this strategy.
Okay.
Each type of permanent life insurance has its own set of characteristics, benefits, and risks. Whole life policies offer guaranteed cash value growth, which can provide peace of mind, but their returns might be lower compared to other options.
So with whole life, you're sacrificing some potential for growth.
In exchange for predictability and stability.
Yeah, exactly.
Gotcha.
Now, universal life policies offer more flexibility in terms of premiums and investment options.
Okay.
But they also carry more risk.
Right.
The cash value growth isn't guaranteed and can fluctuate based on market performance and interest rates.
So universal life might be more appealing to individuals with a higher risk tolerance.
Right.
Who are comfortable with a bit more uncertainty in exchange for the potential for higher returns.
Yeah, that's a good way to put it. And then there are variable life policies, which tie your cash value growth directly to the performance of underlying investment funds.
So with variable life, you have the opportunity to participate in market gains.
Right.
But you're also exposed to potential losses.
Exactly.
So it seems like choosing the right type of permanent life insurance policy is a critical piece of the puzzle.
It is.
When using it as part of a retirement strategy.
It's another reason why professional guidance is so essential. A knowledgeable financial advisor can help you assess those different types of policies and recommend one that aligns with your risk tolerance, your investment goals, and your overall financial plan.
So I'm wondering, how does using permanent life insurance for retirement stack up against other tax-advantaged investment options?
Yeah.
We've talked about Roth IRAs. What about things like annuities or even investing in real estate within a self-directed IRA?
That's an excellent question. Let's start with annuities.
Okay.
They can offer guaranteed income streams, which can be very appealing for retirees looking for that predictable cash flow.
Right.
However, annuities often lack the flexibility and potential for tax-free growth that permanent life insurance can provide.
So while annuities offer stability and guaranteed income, they may not be the best option for someone seeking growth potential or tax advantages.
Right.
What about real estate within a self-directed IRA?
Yeah, investing in real estate within a self-directed IRA can be a powerful wealth-building tool, but it comes with its own set of complexities and requires specialized knowledge. You need to understand the rules and regulations surrounding self-directed IRAs and be comfortable managing a real estate investment.
It sounds like there's no one-size-fits-all answer when it comes to choosing the best tax-advantaged investment strategy.
There isn't.
For retirement. Each option has its own set of advantages and disadvantages.
Exactly. The best approach is to thoroughly research your options, seek guidance from a qualified financial advisor, and consider your individual circumstances, risk tolerance, and long-term financial goals.
Okay.
It's also crucial to remember that tax laws can change.
Right.
And what might be advantageous today could be different in the future.
It all comes back to staying informed
Yes.
and seeking expert advice to navigate those complexities.
Absolutely.
So to bring it back to this brochure from National Life Insurance,
Right.
are they suggesting that everyone should consider using permanent life insurance for retirement?
Not necessarily.
Yeah.
They're presenting permanent life insurance as a potential piece of the retirement planning puzzle.
Okay.
Particularly for those who might benefit from the tax advantages or the additional features and benefits it can offer.
It sounds like a good takeaway is to view this information as a starting point
Exactly.
for further exploration.
For sure.
So if someone is intrigued by the idea of using permanent life insurance for retirement, what would be their next step?
I would recommend reaching out to a qualified financial advisor who specializes in retirement planning and has experience with permanent life insurance.
Okay.
They can help you determine if it's a suitable strategy for you and guide you through the process of selecting the right policy and integrating it into your overall financial plan.
That sounds like sound advice. It's always best to have a professional in your corner.
Absolutely.
When making important financial decisions, especially those related to retirement. Well, we've covered a lot of ground today, from understanding the basics of different retirement savings approaches to exploring the potential benefits and drawbacks of using permanent life insurance as part of a tax-free retirement strategy.
That's right.
All right, so let's recap some of the key takeaways from our deep dive into tax-free retirement strategies.
Yeah, so we started by outlining those 4 main approaches to saving for retirement.
Right.
After tax, tax-deferred pre-tax, and of course, tax-free.
And we talked about how the Roth IRA stands out as a popular tax-free option.
It is.
But it may not be suitable or accessible to everyone because of those income limitations and contribution caps.
Exactly.
That's where the idea of using permanent life insurance as a potential component of a tax-free retirement strategy comes in.
Yeah, and don't forget, the primary purpose of this type of life insurance is to provide that death benefit.
Right, of course.
For your beneficiaries.
And while the death benefit is essential, we also explored how those permanent life insurance policies allow you to accumulate cash value that grows tax deferred.
Yes.
Under current tax law, you can potentially tap into that cash value through withdrawals and loans that are tax-free.
Right.
Which could be a really valuable tool for supplementing retirement income.
It could be.
And we went a bit deeper into the different types of permanent life insurance.
We did.
Whole life, universal life, and variable life. And highlighted how each one comes with its own set of characteristics, risks, and potential returns.
Absolutely.
It's important to remember that there's no one-size-fits-all approach
Right.
when it comes to choosing the right type of permanent life insurance.
Not at all.
Or even deciding if it's the right strategy for you.
Right.
It all comes back to your individual circumstances, your risk tolerance, and your long-term financial goals.
And working with a qualified financial advisor can be invaluable in this process.
Yes.
They can provide personalized guidance, help you weigh the pros and cons of different strategies, and ensure your retirement plan aligns with your overall financial objectives.
And I think it's important for our listeners to remember that this deep dive was all about exploring the information that was presented in this brochure from National Life Insurance. It wasn't about endorsing any specific product or strategy. It was about empowering you with knowledge and encouraging you to think critically about your options.
Absolutely. Financial planning is a journey, not a destination. It requires ongoing learning adaptation and seeking expert advice when needed.
As we wrap up this deep dive, here's a thought-provoking question for you to consider.
Okay.
Given your personal financial situation, your retirement aspirations, and your comfort level with different investment strategies, is exploring the use of permanent life insurance for retirement a path worth investigating further?
It might be. But don't just take our word for it. Do your own research. Gather information from reputable sources. And most importantly, consult with a trusted financial professional who can provide personalized guidance tailored to your unique needs.
We hope you found this deep dive into tax-free retirement strategies insightful and helpful as you navigate the complexities of planning for a financially secure future.
Yes, we do.
Remember, the more informed you are, the better equipped you'll be to make sound decisions that pave the way for a fulfilling and worry-free retirement.
Couldn't have said it better myself.